Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
This podcast is brought to you by Udemy, a leading destination for learning and teaching online. Ready to set your year up for success? There's no better time than the Udemy New Year's sale. Learn for as little as $9.99 and get the Udemy 2023 Trending Skills Guide with any purchase. Better your skills, better your year with Udemy. Act now. Sale ends Thursday, January 5th.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Hello, everybody, and welcome to the China Shop as we are opening the doors for another edition of Roundtable Square Trader. I'm your host, Kyle, and joining me this week are the feckless and frothy Fleri and China Shop favorite superfan, Director of Quality Control, Joel MC. How are you guys doing today?
That's quite the intro.
Doing good. Before we dive into today's discussion, I have to take a quick moment to thank our sponsors and friends over at Manscaped, Trade Pro Academy, and Order Flow Labs. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels. With the holidays over now, this is your last chance to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that's the number 2. Remember, if we hit our monthly goal, that code will last forever, not like that holiday one that's going on and screwing us out of our sales. Oh, we should not have done this in December. When it comes to institutional quality trading education, take a look at tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for all those degenerates who enjoy trading futures, you'll definitely want to check out the custom tools and studies over at Order Flow Labs. And if you enjoyed today's conversation, you can learn more about today's guest by checking out his Twitter, at FleriV. Is that correct?
Yeah, it's at Fleri_V.
At Fleri_V. Do you have a YouTube or anything else that you're...
Not yet. Twitter's the place to go for now.
Twitter's the place to go. So yeah, be sure to check out Fleri. Definitely worth the follow. And then lastly, make sure you reach out to us with suggestions, corrections, questions for future guests, or even to inquire about being a guest on one of these roundtables. We're always looking for people to fill that. You do that via email at 2bulls@financialineptitude.com, or you can join our free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. Those links will all be in the episode description as well. Okay, now, how are you guys doing today?
Doing
good. Well, we're doing good. Turkey dinner's over.
Yeah, this is round 2, Joel. So why don't you kind of fill us in about how things have been going since we last talked to you about 3 months ago?
Give me a second.
Put you on the spot there.
I thought I was going to sneeze.
It's like, wow, it's been that bad, huh? He's got nothing to say. Well, sounds like my last week of trading.
We should have done this a month ago.
The last 3 months have been very interesting. I've learned a ton of new things. It seems I go in stages. I learn a bunch of stuff, and then I feel like I know a whole bunch. And then I get another piece of information, and I go and learn a whole bunch more. And so it was a real information dump for me. Different things to look at, different setups to try. I got a little bit better at back testing, realized that Motive Wave was not my answer for back testing. Might be for some, but it wasn't for me. So I switched back to Sierra. And now Kyle's going to teach me how to do some spreadsheets. We got that going on.
Oh, yeah.
And yeah, still moving forward. I've had some successes. I've had some failures. And yeah, that's what I've been up to.
Joel, you make a good point about getting a whole, like when you get the big dump of information on you, when you learn too much too quickly, like I always find that it actually can be detrimental to my trading. Like I almost have to take a break, figure out how I'm going to incorporate that information, and then pare it all back down so where I'm not having, 30 studies on my charts and too many indicators, too many things telling me to do stuff. Like I almost have to simplify every few months.
Oh, it starts a whole spiral. you'll end up with a chart so full of stuff that you're not using any of it, and you just got a mess. So then you start all over again, and then you add one more thing, and then soon you got 30 things again, and then you got to dump again.
Larry, how do you manage that?
I mean, we've talked a lot about this before. Really just guarding your process and having a process for even things that are either going to be filtered out of your process or potentially introduced into your process. And I think both should be active, which it sounds like that's pretty much every trader's journey. But I like to what you guys are saying, simple and simplification of your charts is an ongoing thing. And I think the longer you look at the same work, the more you realize what's paying rent, what's not paying rent, and you start to simplify. I certainly went through a process of that over the last like 3 or 4 months of just distilling it down to maybe just a handful of things and cleaning up a little bit of some of the things that I have on my charts. And one of the other things that I've done is actually focus, instead of having like 10 charts that are looking at 10 different things, trying to bring in that information from maybe those 10 charts into one execution chart. And so, if I'm looking at, hourly or 4-hour gained and lost levels, and I'm looking at delta clusters or historical delta, but I want to interact with those levels on a lower time frame chart or an execution or trigger chart, I just started overlaying those levels. Mm-hmm. It's like, well, okay, yeah, I'll draw the levels on my hourly or 4-hour, or I'll track the delta on a chart that's meant to do that. But I don't care about where those levels are unless I'm on my execution chart. So I was able to kind of like clear out how many charts I was looking at too, which is another thing too. But yeah, I think simplification is just a process that everybody goes through. And I think probably the longer that you spend trading and looking at charts, the simpler your process becomes. It becomes more clearly obvious what's paying rent or what combinations of things are paying rent for you.
I love that too. Yeah, I think you've talked about that the last few times we've had you on there. What on your screen is paying rent?
Is your execution chart an absolute tornado of information?
No, it's the opposite. I simplified it down. So it's areas of interest from a handful of things that I look at that I want overlaid onto that chart. And it's delta and a couple of other, buy or sell type signals where I want to look for, essentially area of interest, tools confirm, execute. So I want to see us come into a 4-hour gained or lost level. And it's even better if that happens at an area that is a high delta area from previous auctions. And then I want to see delta in, delta out. I want to see an exhaustive push, and I want to see an initiative push away from that area. And the rest is basically just noise. So then I can focus on whether or not price is even in one of my areas of interest. Then I don't care what's firing on my chart. So there can be 100 indicators on my charts all firing at the same time. If it's not doing that at my area of interest, I really don't care. But once it gets to that area of interest, and then the tools confirm, or whatever you're looking for, whether you have a signal or if it's a pattern from the footprint or whatever it is, that's where you're paying attention. So yeah, for me, I mean, it's actually it's much cleaner this way. The only reason I still keep some of the other charts up is because it's easy to get kind of lost. I don't know what's the saying, like the forest through the trees or the trees through the forest or whatever.
Yeah, absolutely.
Because you should always know where you're at in the higher time frame structure too. So it's like you can get so zoomed in sometimes, especially day trading. You can get so zoomed in sometimes you forget that you're pulling into like, yesterday's low or something like that because you've been zoomed in on some low time frame for a while. So I do still keep a look at the higher time frame at all times. I have what I would call like a sort of like an execution chart, which is like the day on usually some tick-based chart. So like on NQ, I really like to use a 512 tick. And then that trigger chart, which is like the pure execution chart, is where all that information gets kind of distilled down to. And that's where I'm very low time frame, and I want to see things. Basically, I want to see buying confirmation in my area of interest if I want to get long, and I want to see selling confirmation in my area of interest if I want to get short. And that keeps it pretty simple. So yeah, I mean, same process, just trying to simplify and again, like I probably look at maybe a half a dozen things on a regular basis, and maybe a dozen things from a homework perspective that some of it might make it down to a daily plan, some of it might not. But yeah, the process of getting things simple is definitely I mean, it's just an ongoing thing. It's something that you should be doing. I wouldn't think negatively upon it if you're churning through some ideas and things like that.
Does that ever slow down? Like as you learn enough to like, do you finally stop learning so much at once? Because a lot of times it feels like drinking from a fire hose. Like if it could at least be like drinking from the
Man, that's
bathtub
a good
faucet,
question.
that'd be a little more manageable.
I think it
Right?
slows down when you gain confidence that you've created a profitable system
Yeah.
or a profitable process. And I mean, maybe even to back up a little bit, that you feel like you can clearly define what a profitable process looks like. But assuming that you have one, right, and that you think that you're executing in it consistently, you've got some version of a subset of rules that you're trying to follow. I think that's probably the point where then you start to really guard that process. Until you have a defined process that you think is profitable, it's sort of, churn and butter, right? Until you get something that works. And then, in theory, you should just be nurturing that thing, right?
So,
And you shouldn't be deviating from it.
so would you even say that it would be part of the process to go through that, where you're essentially experimenting, trying different things until you find something that is going to be a base to your process or the next step in
Well,
your
yeah,
process?
100%. I mean,
I guess that is part of the process, is finding your process.
yeah, I mean, you have to establish some sort of, foundation
Right.
first, right? And then I think it
Right.
becomes building blocks and nuance. I mean, what kind of trader do you want to be? Are you trading support resistance levels? Are you trading just purely order flow? Are you trading volume profiling? Are you TPO charts? Whatever it is, there's got to be some version of a foundation. And your foundation could just be 3 very individual setups that you track across a bunch of markets. And when those setups happen, you always take those setups. And your process could be, I hunt for these 3 setups to happen in the market, and it's all I do. Versus maybe you're tracking a way to create levels, and then you're tracking a way to interact with those levels, and then you're tracking what your what your take profit scheme would look like, in A setup, B setup, whatever. There's a bunch of different ways, but yeah, I think the process of getting to somewhere where you feel comfortable with, you can repeat this thing and it has a good result, or even like even if it has a close to break even or a bad result, like if you think that there's promise in it and it's worth sticking with, and I mean, we talked about this before, you have to stick with it long enough to know it's bad too.
Right.
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 Like, and I think that's where paper trading is actually helpful. It's not going to help you with the emotions of trading that same system, but some version of back testing or forward testing with paper trading, or, a bunch of these different prop accounts it's a good cheap way to get some skin in the game and see if your idea makes sense. But yeah, I mean, having a process of building your process is obviously important. Assuming you already have it, then it becomes protecting it, right? And I think that's, like, again, what we've talked
Right.
about a bunch is, you should have some small amount of your weekly time set to investigating some things that smart people around you are doing. And it might just be educating yourself so that when you hear someone else that's talking about cycles, speak about cycles, that at least what they're talking about and what implications that could have on some of the things that you're seeing, and is there confluence across multiple modes of work.
Right.
But you're not going to spend 5 hours this week studying cycles if you're not trading them. Now, if you spend
Totally.
10 minutes educating yourself on it, or following a Twitter feed of somebody who uses cycles or whatever it is, that great, right? But that's guarding your process. You're not going to waste a bunch of time that you could have used doing your own personal backtesting, forward testing, or just evaluation of your work on someone else's work, right? But maybe you spend 5-10 minutes a week and you do that, consistently, and then you feel like, hey, maybe there's some merit in this. I'm going to allocate a little bit more time, or okay, now I'm going to start to incorporate a setup based upon all the things that I've learned. And now, like, again, like, your process gets guarded, and it keeps you from, which I think was our original point, of having a million things on your chart from a million different sources. And, you could never keep track of all the nuance of all the things that all these things they're working for someone, right? Like,
Right.
that's how they came
Right.
about. That's how you learn for them.
Exactly.
but you could never manage the nuance of, 100 different traders' personal setup on your chart, let alone try to like watch the order flow and all the things that people try to do all at the same time. So,
Right.
yeah, it's the process of creating the process, having a process, and then guarding it. And it all leads to simplification at the end of the day. I think you end up with less stuff on your charts, and the stuff that you have has a reason, an intention, or a purpose. And if it doesn't, over time, it should slowly probably just drift away. In my humble
You
opinion.
mentioned the foundation. Can you speak like what do you think makes a good foundation for a trader starting out?
I mean, you should set up one simple setup is probably the easiest way to do it. Whether that setup is like a pure, like for example, like consolidation breakout on like a daily or something like that. And, you could say, I look for 7 days of consolidation minimum. And I take the first breakout candle and I put my stop below the low of the day or something like that. Like that's like a pretty standard, like multi-day momentum type trade or something like that. You could build a foundation on that, and then you could have smaller time frame versions of that trade, or whatever nuanced versions of that trade. So that's like a setup, right? You're looking for one specific thing. Whereas, if you're setting out to day trade, especially in futures, you're trading the same product every day, so you're not going to have a foundation necessarily that's built. If you only trade NQ in one specific setup, because you might spend a week watching NQ trade and maybe the setup doesn't come. Now, can you still do that? Of course. You could be patient and wait for your one setup and not trade, and you hit that with size and blah blah blah. But for most people, I think the journey looks like trying to find some version of where do I want to do business, right? Like, do I want to use supply and demand zones or gained loss levels? Do I want to use trap traders? Do I want to use swing high, swing low? Do I want to use historical delta? Whatever people do to create levels, settlement levels, or option strike, whatever,
Right.
put walls, call walls. That like there's a million different things that you can do. But I think like at the core of it, it's like an area of interest, right? Like decide in a really consistent way, where do you want to do business? And there's some, more advanced ways you can do it. And there's probably some really just simple vanilla ways that you can do it. Like put a RTH VWAP on your chart. And, you want to be long on test from above and you want to be short on test from below and build a system on it. I mean, there's guys that'll do that with like a moving average, right? Like you can put a 144 moving average on a 512 tick in NQ and find a bunch of great trades, on either side of that line as it goes on your chart. So again, I think it's like finding where you want to do business and then finding the nuance, whether it's order flow based or, just some simple price action pattern that you look for around that. So that would be kind of like that day trader foundation. Is like, where do I want to do business and why? And how do I define that? And then when I zoom in and we get to that area of interest, is there something that I look for?
Right.
And, I think the last piece would be what kind of trader am I? Am I scalping this level? Am I position trading this level? Am I looking for half of the daily range off of this level? Blah blah blah. I think there's a bunch of different ways you can do it, but yeah, I mean, at the core of it, it's probably like I show up to this market every day and I look for these spots to do business on a consistent basis.
What do you think, Joel?
That was excellent. A very good explanation.
Do you have any follow-ups to that?
Yeah, I think it really does boil down to that, right? It really boils down to you have to have a process and you need a process to building that process. And then once you have it, then you have to guard it. That kind of sums it up, right? And you need to be cognizant of what's going into it and what's coming out of it.
Yeah, garbage in, garbage out too. And you got to have a filter. And listen, just because it works for me doesn't mean it's going to work for you. There's definitely things that lean into people's strengths too. So being honest with yourself on that too. Like I see setups, and just no setups trading with scalpers that like I could see them. I see them pop up, but I know if I try to take this scalp setup that shows up 100 times a day across 10 different markets, that I am not disciplined enough to execute that setup perfectly or as perfect as I can that many times per day. Whereas a scalper and someone who has that level of discipline, that level of, observation, see it, hit it, that it takes to watch these patterns come in as fast as they come in and execute as close to perfection as they can across a multitude of trades in one day, potentially across multiple products. That's not my strong suit. So I know, even though I can see that pattern and I know it from learning it from people or just observing it, I don't want to trade that, because I know if I try to take those 100 trades, I'm going to screw up 30 of them, right? Or whatever. And that type of strategy needs an 80 to 90% win rate. And I know right out of the gates that my own shortfalls make that strategy not make sense for me. So there's that piece of it too, right? Where you just got to be honest with yourself on what kind of trader do you want to be? One, what fits your lifestyle? What fits your personality? What fits your time, availability to be in the markets and things like that too. So yeah, I mean, all of that should go into building the process, but at the end of the day, you should feel good about it, right? Like you should feel good about whatever you've built from your body of work. And I can guarantee you that some version, if not most of it, will come from something that someone has taught you, something that someone shared, and you were able to pick up on the nuance, or just, communication with other traders, whether it's in Discords or whatever that looks like. That learning someone's nuance is like one of the most powerful things you can do. And then learning how that style fits to you is the biggest thing. Cause it's like, you could have a really, you could have, what's his name? The guy who kind of created TPOs. You could have Dalton. Teach you TPO, right? You could go to his classes, you could do the thing, but unless you really get to ask some of those nuanced questions and they start to share some of the nuanced setups and those observations that you just can't learn from a book, you have to be watching TPO charts for years, weeks, months, whatever it is. When people start to share that stuff and then you take that back and you incorporate that into your process, that's where it starts to become this Frankenstein of a bunch of really smart people who you've networked with turning into your process. And, you take a little bit from here and a little bit from there, and you build something that feels good to you. And, like you said earlier, that might look completely different, year 1 to year 2 to year 3, year 4, and so on and so forth. And I think at the end of the day, it probably ends up in the most simple version of that. With as little stuff on your charts, down the road somewhere. But yeah,
I think the danger in that though is when you start if you get too excited about something that someone's sharing with you, and then you just completely abandon everything that you've done before, and then start focusing on that. That's the thing that I think a lot of people struggle with. And does that make sense? Somebody teaches me a new delta in, delta out strategy, and now I've decided, okay, never mind, forget my breakout strategy that I've been working on for the last 6 months. I'm going to scrap it and start over from here. And then when I fail at that, then I'll go dust off the one that we used to work and see if I can't figure that one out again.
Right.
It's a vicious cycle. That's
where that process of guarding your process comes from. You have to be intentional. Otherwise, you're going to be hopping around. Joel, what did you call it?
Yeah, what were you saying, Joel?
Being a bee going from flower to flower, right?
Yeah.
Exactly. A bee flower to flower and never staying with one thing. Yep, absolutely.
And I think the answer to that question is, which the actual full question was, how do you get over the hurdle of your tendency of being a bee going from flower to flower, not sticking with anything, to your advantage? How would you overcome that? The answer, I think, for me would be guarding your process, right? And yeah, okay, if you're still developing your process, it's a little bit harder to guard it because you need to develop it. But in the same sense, you still need to have some sort of plan, like you just think, oh, delta in, delta out. Now I'm not a breakout trader anymore.
Right.
I'm looking for this. Well, no, you're a breakout trader. That's the process that you're trading daily and that you're working on your discipline on and your execution on, and you're spending a majority of your time away from the charts developing that strategy. For now, that may change, but for now. But then again, maybe you're allocating 15 minutes, 30 minutes a week, or whatever it looks like, to seeing okay, how does this delta in, delta out fit into my overall process? Does it have a place? Does it replace breakout trading, or does it complement breakout trading? And then you start to look at the things together, right? Mm-hmm. Okay, well, we had, for a breakout trader, maybe you wait for like a big impulsive move, right? We break through, well, we haven't broken through anything lately. So let's just say we break down.
There you go.
We break down through support in a big impulsive move. And, we have like a 100-point down candle through what was support that lasted about 2 seconds, right? And then we get our first pullback. And in that first pullback, you might be looking for a breakdown trade on the next, like, I would call it like a pop pullback candle under candle. So you would pop back up, and then the candle that makes the high, you would want to get short when you break the low of the candle that just made that new high. So it's a pop back up, and then you're looking to short that pop, right? It's a kind of a classic price action, like 2 or 3 bar or 3 or 4 bar setup, whatever.
Okay.
So, that would be a sort of like a breakout trade, right? Like you're looking to break out from this new, or break down in this case, given the last week's action. You're looking to break down, right? So, okay, well, I have this very specific thing I look for in this breakdown trade. I want to see price retrace after a big move. I want to be short the low when we break the low of the candle that makes the high on the first pullback. I want to see volume come in on that break to confirm the move. And I want to, at the very least, see this go to the previous swing low relatively quickly. This trade should happen fast when it happens. And that's my setup. Well, now all of a sudden I've got this new information about delta towers, delta in, delta out, blah, blah, blah. And so instead of just saying, oh, nope, I don't trade that, pullback candle under candle move anymore, forget that. Maybe you would go and say, okay, when that pattern set up on any of my trades, was there any delta out on that I could use as confirmation? And
Right.
Maybe what you find is that, oh, look, this setup failed. We broke the low of the candle that made the high, but we didn't have any delta supporting the move. And it just sort of like, maybe it only went 2 or 3 points, and then it pulled back and it was a failed 3 bar setup or something like that. Well, maybe you could go back and say, oh, well, look, a strong buy delta came in on that pullback, so there was no delta in, delta out, or maybe on the push, the exhaustive push up on that first pullback, maybe there wasn't an exhaustive buy and you only got a little quick sell push. And that's one thing that I look for, is I like to look for an exhaustive push. If we don't have that exhaustive push from a delta perspective, then I don't like that setup. I would call that like an unsecured low or an unsecured high.
Right.
Because you want to see an exhaustive push into that area. So that's where I think, versus like, to your point, Kyle, like, oh, you just scratched the whole setup. Like, now I'm not trading this candle under candle pattern, it's 3 bar pattern anymore, whatever it is, because I'm only looking for delta in, delta out. Well, no, can it complement that? And, maybe in complementing it, maybe somewhere down the road you go, well, this is an easier way to quantify my breakout strategy or my candle under candle strategy, whatever it is. Like, yeah, maybe one day it eliminates it, but for now, your process is that, and this should only complement it and or add to it as a complete separate entity. It should never just come in and replace it, and I really don't think it should never just come in and just be like a side to it right away. Like, it needs to earn its spot on your list of things that you're looking at, right? It shouldn't just come in because somebody mentioned it on Twitter or whatever. You got to do your due diligence. And that time, I think, is that guarded time, right? Maybe if it's something that you really, really are passionate about, you want to allocate more of your personal time to it. Sure. But as far as like time away from the screens go, it should be focused on the things that you're currently doing to execute trades, and very little about things that you plan on potentially letting into your process.
That makes a lot of sense.
Very interesting. Yep.
So I think that's how you overcome that, right?
Right. Absolutely.
You just become an allocator of your time, and through that you're guarding your process, right? Like, define what it is. And then, have that definition of what is my process. And then, maybe on a separate list is like some things that you're interested in, or some things that you might think complement your strategy. So if you're a price action trader and you're looking to complement price action with some version of order flow, maybe you're spending 5 to 10 minutes a day looking for order flow type things that complement your price action setup.
Finished auction on a footprint or something like that.
100%.
Right.
Yeah. Okay.
Part of that too is
Awesome.
I think you need confidence in at least the thing that you're trying to do too.
Yeah. I think the key there is the process needs to pretty well be established.
Yeah. But there's no point in having a second piece to a process if you don't have a first piece yet. You don't need to build a 15-step playbook
Right.
if the first step is not even established.
You got to have a team first.
Well, I think there's a lot of pressure to like build this magical process too, right?
Yeah.
Like,
oh, for sure there is.
The process can be one setup. That could be your process. And trust me, there's plenty of traders out there that that just look for one thing. Typically, if you're looking for one setup, you're doing it across multiple markets, whether it's futures or if you're trading in stocks, whatever, crypto. Like if you're looking for one very specific like weekly consolidation pattern, well, how many products are going to be weekly consolidating? You're not going to trade NQ only or ES only and have a daily consolidation breakout pattern that's based on momentum. Now you might be able to have that as your only pattern that you trade, but it's going to be pretty difficult if you can't diversify that across a bunch of different markets. So yeah, I get like the need for there to be this mystical process is also not necessarily there. I think it's like you need either a setup or some basket of setups that ultimately give you the ability to execute enough trades where your risk reward skew makes sense and there's enough opportunities in the market. Because you could have a trade setup that has 100% win rate, but it only shows up one time a year.
Yeah.
What are you going to do?
Bet the farm.
I mean, I guess, right?
Yeah.
You bet the farm, but what if you miss it?
Right?
Now you got to wait till next year.
Shit.
Right.
Yeah.
So, I mean, and that's where it's like, you got to kind of build, you got to build something, right? But it doesn't necessarily have to be this mystical process of like, I look at these 10 things and blah, blah, blah. I think it just kind of happens organically too, is you start to look at these setups, you start to look at things, especially when you start incorporating order flow. I think order flow really helps complement day trading very well because you're able to kind of use this like to the second, to the minute data, whether it's across multiple time frames or just one that you're looking at in order to complement a handful of different things that you look for or areas of interest, right? And I think that's where like a lot of people kind of land is like levels and order flow. And that's certainly a process, right? If someone says, what's your process? You say, I wait for my level and I look for order flow to confirm, or I wait for my level and I look for this certain price action pattern, or, whatever. So yeah, I think defining it is just as important as, as getting to the point where you're going to protect it. But yeah, I mean, it doesn't have to be this mythological, super process. The thing can be one trade. Like it could be one price action pattern. You could trade only 2-bar reversals or 3-bar reversals or whatever. And that'll show up all day long across a bunch of different time frames, right? You just, that's your setup. But yeah.
I think that's been for me though. I would have to say that's my whole B flower to flower is I'm looking for that mythical setup, mythical process that is just, I keep trying to develop something rather than working on one thing. I'm trying to create this wonderful package, but I don't have anything to put in the package, And so I think one of the things that I should probably be working on more, which I have started already, is breaking it down so that it is just one thing to work on at a time. Wait till that gets good, and then I can start adding to my process.
Yeah, I think we talked about that like maybe a year or so ago. Like let's master something first before we try to move on and add to it.
Right. Like I say, I'm on the doctor plan. And so I'm 4 years into this. I've got another 4 years until I get my diploma.
There you go.
My PhD. And so it takes me a little longer to learn. Maybe it doesn't take me very long to learn what the material is, but it takes me a long time to learn what I'm supposed to be learning.
And then also how to incorporate it too. But I like what Flery's saying about like just guarding your time, like structuring it better. Like how often do we just find ourselves staring at charts aimlessly with no plan? Like, what are we actually trying to observe?
Well, we talked about that the other day.
Yeah, be intentional.
Yeah.
Be intentional, for sure.
Yeah. I was talking about that the other day with somebody about how, like, you can sit and look at a chart and you think, like, my setup is almost there. And by the time it comes, it's been an hour and a half and you haven't even blinked.
Right.
You can lose a lot of time if you're looking at the charts if you're not looking for something specific. It just becomes something moving constantly.
Right. Or just having a goal, like, okay, this week I'm going to draw or plot out my daily and weekly levels on Sunday. And then this week I'm just going to, every time price gets to my level, I'm going to observe order flow and see what I see. Make notes, journal it.
Yeah, that's a process for building your process right there.
Mhm.
You know, I've
Right.
already established what my areas of interest are. Now the next piece in building this foundation for me is let's observe what happens when price comes into my levels, because there's going to be something,
Mhm.
right? Like, and I think that's probably the easiest way to start building a process, right? Define your area of interest, whether you're trading in LVNs on the volume profile, if you're trading historical delta levels, if you're trading trap trader levels, whatever you're doing that creates the line on your chart or the box zone on your chart, go watch to see what happens when price gets there. Right? How far does it shoot through when it does shoot through? What happens when it shoots through the level and it pulls back in and reclaims the level? What happens if you're patient and you wait for it to break your level and pull back and test the level again on a pullback, or consolidates near your level? Again, it's about building this foundation around an idea of, you've decided you want to be a trader that looks for areas of interest and what happens at those areas of interest, whether it's order flow, price action, whatever. Focus on it.
We know this intuitively, like, because we get told it all the time, but it doesn't, like, I think we
Right.
forget it too, but it doesn't happen the same
I
way
do.
every time, you know?
No,
No,
that's right.
And
no,
that's
it certainly
what makes
doesn't.
it so tough. You have to observe it enough times to see enough things to where tendencies start to happen, percentages, and you can start to make
Nuance.
nuance.
Yeah.
Learn the nuance of it.
Yeah, I love that word.
The OR and NQ. So I trade a 30-second OR. The OR in NQ has kicked my ass over the last, say, 7 trading days. And they just didn't make it easy. There was lots of little fake outs above and then breakdowns, fake outs above and then breakdown, fake outs below, fake out above, breakdown.
Yeah.
And so, listen, I got my butt kicked last week, and I came into the office today and I said, all right, I'm just going to work on some things for a couple of projects coming up, and I'm just going to do some work. Right, I'm not going to trade today. And wouldn't you know it, today was the biggest layup in the OR and NQ. It didn't trade one tick above the OR high. It broke the OR low in a clean candle and never came back. Whatever, it came back, but the trade, I would have been long out of the trade. It's just that's just the way it is sometimes, right? But some days they make it easy and it's the textbook version, and some days it's it's the head scratcher, right? It fakes you out and maybe you miss it, but it's never the same, but it does repeat, right? There's certainly some things that you see happen over and over and over again, whether you're looking at a balance area chart, or you're looking at the OR, or you're looking at the way it interacts with a pivot or an LVN or whatever you're looking at. You'll see patterns, but it's rarely going to be 10 times in a row it's the easiest OR breakout trade you've ever had. No.
If anything was that easy, then it wouldn't work for very long, because everyone would be doing it, and then the more people that do it, I think the more people, the market's always positioned to hurt the most people, it seems like.
And I think that's why a lot of people lean into the things they can control versus trying to be a robot in the market. You can control your risk, you can control how much size you put on.
Mm-hmm.
Those are the two things that you can pretty much always control. How much am I going to let this thing come against me? How much am I going to trade? And where am I going to pay myself along the way if I get to that stage of it? And that's why I think you see a lot of people use that as a mechanism, right? They might have done the research to know, okay, when the OR breaks, I want to pay for a portion of my trade, I don't know, whatever, 10 points away in NQ, 15 points away in NQ. And then I want to set my stop to break even. Okay. Right. That might be your system. But you're using what you can control to best control a system that is erratic. Right.
Yeah.
Because some days you don't need a system, right? Some days you just short the OR low, it never comes back, and it goes 120 points in 10 minutes. And look at you. Oh, I'm an OR trader.
Yeah.
Well, then tomorrow you come to the market, you short the OR, and it snaps back and it goes 25 points to the OR high, and you didn't take your stop, and then you got long the OR high, and then it whips back on that, and you didn't take your stop, and next thing you know, you're down 150 points, and you've been trading for 45 seconds,
Yeah.
and you didn't have a plan because the market did what it wanted to do, and you tried to force it to break out of a range that you created, right? Like,
right.
And again, that's where, I'm not saying that's the end all be all answer to it, but that's where you see a lot of people lean into risk and size because you can control it, right? Like, hey, I'm willing to take this trade and have a cost of doing business. Maybe I take a 3-point stop in NQ on the OR trade because when it goes, it should go, and it should go fast. Okay, well, I took this trade 3 times, and I just gave up 10 points on size. Okay, well, now I'm going to cut that size down. I'm not going to give up on this trade because we're chopping around, and I think we might break down. Blah blah blah. But maybe you don't sacrifice 10 contracts anymore. You put 5 on because it's choppy, and the conditions today are not pure for this setup. It still may set up, and you're still going to take the setup, but you've already allocated some amount of your expenses to trying to get the perfect pure trade. And it's clear that's not going to happen today. So, now you need to size down and still maintain your risk so that your, cost of doing business is reduced as the conditions are not optimal.
Right. Sorry, Joel. I'm trying not to take up all the time. I want to make sure you get to ask your questions. Support for Two Bowls in a China Shop is brought to you by Manscaped, who is the best in men's below-the-waist grooming. Their products are precision-engineered tools for your family jewels. Manscaped's Performance Package is the ultimate men's hygiene bundle. Join over 7 million men worldwide who trust Manscaped with this exclusive offer to you. 20% off and free worldwide shipping with the code 2BOWLS at manscaped.com. That's the number 2. And if my math is correct, that's about 14 million balls, and that's a lot of balls. I've tried beard trimmers in the past, but the electric pain of a trimmer catching the sensitive skin of my beanbag had turned me off grooming below the waist in the past. But after receiving the Performance Package 4.0 from Manscaped, my attitude towards below the waist grooming quickly changed. The Lawnmower 4.0's advanced skin-safe technology is a game-changer and quickly put all those old fears to rest. The cutting-edge ceramic blade really shined here, and I didn't experience any discomfort while mowing down a severely neglected and overgrown landscape. And trust me when I say this, but I gave this thing a workout. The 4000K LED spotlight is a great touch as well, especially when taking advantage of the fact that Lawnmower is waterproof. That's right, no more mess on the floor when you just use it in the shower. The Lawnmower really is the best ball trimmer I've ever come across. But the Performance Package 4.0 doesn't just come with the trimmer. It's jam-packed with goodies including Crop Preserver Ball Deodorant, Crop Reviver Toner, a surprisingly high-quality pair of free boxer briefs, and my personal favorite, the Weed Whacker Nose and Ear Hair Trimmer. No longer do I have to resort to ripping out overgrown nose hairs with tweezers, and because the waterproof Weed Whacker also provides proprietary skin-safe technology that helps reduce nicks, snags, and tugs in my delicate nose holes, it's a much more pleasant experience than the old methods. And not only do you get that free pair of boxers, they also throw in a free travel bag to hold all that swag. It's time to take care of yourself, so go to manscaped.com and get 20% off plus free shipping with code 2BOWLS. Trust me when I say this, fellas, your balls will thank you. I know mine did. So get 20% off and free shipping with code 2BOWLS at manscaped.com. That's 20% off with free shipping at manscaped.com and use code 2BOWLS, and that's the number 2. Unlock your confidence and always use the right tools for the job with Manscaped.
Well, yeah, what else you got, Joel? You know what, Kyle? Come on now.
I know, it's so hard, though.
I was going to say, it's so funny how come in with, a list. This one is a lot smaller than the last one. We come in with a list of questions, but it always reverts back to if you've got somebody's ear that's willing to listen and willing to help, you just go straight to what the root of the cause is, right?
Right.
I know for me, the root of the cause is process and building it and lack of it and developing it.
I think we all just like talking markets too. I mean, it's just
that's part of it too. But you can skip all this other stuff if you've got that ear and you've got their time. Then you exploit it.
Try to go to the important things. Like confidence is always for me something that I always find myself like struggling. Like when I got it, it's great, but when I lose it, then it's all is lost. Like it's disastrous almost, and then it takes forever to build it back again.
It's like a roller coaster, man.
That's a big one.
Well, this isn't about me.
Again, like I struggled over. Well, no, I mean, I'll share for me. I struggled over the last week. I think I went from having what may have been my best 2-week run to definitely my worst 1-week run. And I came in one day and I was like, you know what? I'm done with it. Like, I'm going to stick to my process. I'm going to take my trades, but I'm going to try to get one good trade under my belt and get a green day. And I am shutting this thing off. And I don't care if it's 5 seconds into the market open or if it's 5 minutes or whatever. It ended up being about 45 seconds. And I was like, okay, boom, hit the trade. I was in the trade for maybe a minute. It shot down, made some points, and I shut it all off, and I just like banked the green day. I banked the confidence. I banked, that sort of like, whatever you want to call it, just like kind of getting the monkey off your shoulder of like, okay, enough with these red days. Like, let's just shift this so that you can do something, whether it's real or if it's just like something we create in our head. It helped me. And I was like, okay, now we can put this behind us, and we can come back, maybe a little fresher or whatever. But
the other thing that I found helps me is actually the just tracking everything, like the way that you taught us. I think one of the last times we talked to you about collecting your data and being able to have that to fall back on, like having that I can pull up and be like, okay, the last 3 days sucked ass, but let's look at the last 3 months and see where we're going. Oh, look at that. It still looks good.
Yeah, exactly. Yeah, you've turned me into a statistician,
right?
Where I've gone from trading to try and earn a living and make money and enjoy the markets to I need to collect more data.
I love the data.
That's my main focus now, is just collecting data.
Collect enough to build your confidence and to know that what you're doing is relatively profitable, right? And then just look at that equity curve, right? It's build a process that goes some version of up to the right, and then make sure it continues to go up to the right. And if it dips down too much, like, just be honest with yourself, like, why did it dip, right? Like, I think for me, I came off a pretty hot month of December from the card rooms and playing some poker tournaments, and I let that ego come into my trading and maybe traded a little bigger than I normally do, and gave things a little more room to work than I maybe normally do, and it sort of spiraled into like, what, like, am I even trading my process? Like, what am I doing here this week?
That's not my beautiful wife. That's not my. How did I get here?
What am I doing? But like, I think it's like once I know where to revert back to, right? And I have a couple of setups too. We've maybe talked about this before too. Like, you should have your good old trusty too, because when you're in the gutter and you're hurting, you got to have that good old trusty to go back to, whether it's a trap trader setup or like I love trading off the session delta pivots, like where I started with those. When I'm really struggling, I just go, okay, give me one good clean like delta setup and get me out of this rut, right? So I think that's a big one too. Like, you got to have a good old trusty to go back to build that confidence back, because real or not, or whatever, smoke and mirrors, if you don't have your head in the right place, and this is already freaking hard enough, you're going to get your ass kicked. I mean, you're just going to get your ass kicked. You got to be in the right state of mind. You can't have just come off, struggling getting the kids on the bus or fighting with your wife or whatever. Like that, those things, they affect you, and they affect your decision-making process on some version of, whether it's a tangible level or not. Like, you should be aware of it. Like, is my state of mind today the kind of state of mind that will allow me to make the best decisions I am capable of making? And if that answer is like remotely no, you either, one, shouldn't be in the market, or two, you should have some sort of a plan. Like, okay, listen, I haven't been trading well, or the kids drove me nuts this morning. I'm only going to trade this one trade. I'm going to try to just get a few points, and then I'm just going to lock in a green day and kind of move on and come back to the markets tomorrow with a fresh mindset. Or just not trade at all, right? I think that's just as successful.
How about a plan to try to get you into the right state of mind, whether that be meditation or something? Like, lately, I've been adding something that Purdue suggested, one of our other Discord members. I do a mental purge every morning. So I take inventory of where my head's at, and then everything that's in my head that's bothering me, that I know I have to get done, I just write it all down, purge it from my mind, reassess my mental state, and see where I'm at. And sometimes just getting those things out of your head, like, oh, I got to take somebody to this appointment, I've got this interview coming up, I got to get this edited. Write it down, get it out of your mind, and then see where you're at after that. It's something simple, but man, it makes a big difference.
Yeah, and part of it is you're able to identify then too what's causing it, right? You talk about getting kids on the bus and fighting with your wife or whatever, and what kind of mental state you're in. But not being able to identify that makes it really hard to know that you're in that state, right? But when you've got a way, like a mental dump, then it gives you a way to measure it and know where
Well,
you're
plus
at.
then you also have a list of things that you can look for. If you're still thinking about them, then you know you haven't mitigated them yet. Like,
Right. Well, it's just
Right.
being self-aware, I think, is one of the biggest
Conscious,
assets
yes.
or traits that you can bring into this business that will benefit you is whatever. At least at the very least, just be honest with yourself. Like, if you're gambling today and you're not trading, is it always easy to stop in the moment? No. That's how
Nope.
accounts get
Yep.
blown. That's how large losses happen. And listen, we all will
Yep.
do it, 100%. Maybe 1% of the 1% that make it in this thing will never have that moment because they just have that like pure discipline where that's just not a possibility for them. But for 99.9% of traders, I'm guessing, yeah, fuck that guy is right. I know that
Oh,
guy too,
God
and it's
damn it.
so frustrating. Like, I'm like, God, how do you do that? But again, he also knows that that's one of his strongest assets in
Right.
this game, and he
Right.
leans heavily into that. So, anyways, but like, I think being hyper self-aware is one of the best things that you can do in this business, and that comes with just being honest with how you're feeling, with how you're trading, with your analysis, post analysis, trade analysis. Like, all of that stuff needs to be super raw. Otherwise, you're just like you're already like you're basically cheating yourself
Oh,
too,
that's a good
right?
point.
And it's not
Totally.
easy to do. Like, because who wants to come into work, right, and then be like, well, okay, let's be honest. The kids drove me nuts this morning. I didn't eat breakfast. I haven't had coffee yet. I'm 15 minutes behind. Data came in at 7:30. The market's dropped 180 points. I didn't finish my charting. But yeah, let me jump in and trade my full
Right.
size, on the open. What's going to
Yeah.
happen? I mean, we've all done it. I mean, what the result is. The worst case is you actually win, and you have successful trades, and it's a profitable day, and then you negatively reinforce or positively reinforce a negative behavior. But my point though is it's not easy to have this be, whether it's something you're striving to be your job or have it be your job, to come to work, sit down and go, I shouldn't do this today.
Yeah.
Like, that's not easy to do. And I think it's probably one of the things that we all should be able to do much better, because the reality of it is there's definitely days where some version of either, reduce size or trade the micros or turn the damn computer off is an answer, some percentage of the days, and for some it might be, 5% of the days, for some it might be half the damn days.
Yeah.
Who knows? And for a week it you're in a rut, and that answer is, hey, maybe not today, for for a week or something like that, 2 weeks, who knows?
Actually, yeah. I mean, Joel, you just recently took a week off, right? Like, how good did that feel?
Yeah. So I took in the end of November, I literally took 10 days off. I would still get up, I would still look at a few things, but I wouldn't get into any deeper level of it. And then I would go to work and I would shut my computer off, and I would work for the day. I didn't worry about trades, I didn't worry about P&L, I didn't worry about where the markets were. And I just had a break, and it was lovely. And it was absolutely lovely. But then on the flip hand of that, last week, I was so frustrated. For whatever reason, I felt like I wasn't progressing. I felt like I wasn't getting what I wanted. I felt lost. And so I just leaned into it on Wednesday and Thursday. No, on Thursday and Friday. Just leaned right into it. Luckily, I didn't blow up. I actually had a fairly decent day the one day. But like you say, there was no process, there was no accountability, there was nothing. And those are the days where the computer should have got shut
Right.
off, And then you can avoid that kind of stuff. And I think it probably gives you that break, which obviously you need, but then it also doesn't reinforce that bad habit like you were talking about, Fleri. You should never win You should never win on a day where you shouldn't be trading because of your headspace. Those are the worst.
Or at least if it happens, going back to that self-reflectiveness, like at least be enough self-aware to go, all right, I got a green day today, but I did not earn this. There's like an old Tupac song. It's like, you made a G today, but you made it in a sleazy way, selling crack to the kids. Rat tat 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 tat. That's the way it is. Like you should at least know. I might have made 100 points today, but I probably shouldn't have, given the way I came to the market. I was unprepared. I'm just in here hitting spots and blah blah blah. Like, at least have enough self-awareness to go, all right, I might have made some money, but I didn't earn this.
I became a scalper for 2 days, and I have never been good at scalping before. I was a scalper for 2 days. So that's another story, though. We have, I have a question that both Kyle and I both wanted to ask anyway, so we should get to that before we run out of time here. Have you found better success trading level to level or using a risk reward ratio of, say, 2 or 3 or 4 or 1 to 1? Which do you find works better for you, and why do you do that?
My answer is like both, but
do it then.
I'll break down the question. I'll break down the question.
Sure.
As I think, a developing trader, whatever, would want to look at this from. So risk reward, like a clean 2 to 1, or a clean 3 to 1, or whatever, I think is always easier if you're in the building stage. So, we talked a lot about earlier on in this conversation, building a foundation, developing your process, blah, blah, blah. So if you're in that stage, it's so much easier to lean into risk reward. Now, everything comes with an opposite to it, right? Like, so if you say, okay, I'm going to set up a 2 to 1 bracket, and I'm going to take every 1 hour loss level, gain loss level that we come into, and I'm going to give it 15 points, and I'm going to look for a 30-point take profit. Okay, well, you take 100 trades and you do that, and you have a positive expectancy. Let's just say your equity curve goes up and to the right, and you made more points than you lost, and whatever. It's a good strategy.
Yep.
Okay, well, then what you do is you start going and looking at, well, oh wow, I took profit on this trade at 30 points, but it went 100. Well, and I took profit on this trade at 30 points and it went to 60. And then you start second guessing that. So the sort of the drawback to that is you have to be happy with what is like the like I always call it good enough, like the hashtag good enough of that setup, right? So if you want to be a pure risk reward trader, you're all in, all out, or some version of like, most of your trade is coming off at like a 2 to 1, 3 to 1, whatever. It's pretty standard for most people. You just have to be okay with that. And that should potentially then drive you to look for more setups that meet that, that parameter of like, hey, I only want to risk, 15 points and I want to make 30 or whatever. Now you can go hunting for a bunch of strategies that sort of like show up throughout the day in that. The downfall to that is, if you're always all in, all out, you're always looking for more trades, and that's not into your strong suits and all those things. Like there's the potential that you don't capture all the move.
Right.
But it's really easy to quantify. And that's what the strength of it is, especially if you're just trying to build a system around something, right? Like if you're trying to backtest something, good luck trying to backtest a 6-lot take profit scheme that, takes profit at, 15, 30, 50, blah, blah. Like it's going to be so hard to do that that's where this like sort of like that backtesting journey becomes very difficult, right? Like, and that's where it's very easy to do if you go back and you say, okay, I want to risk 15 points and I want to get 30. Does this setup work? And you can find a bunch of things that just work. And it becomes very easy to build the confidence, to build consistency, because you have a very rigid set of rules. The less rigid those rules become, which becomes that like level to level thing, I think the harder it then becomes to quantify whether or not what you're doing is working. You have to use a lot of sample size. So, level to level would be, I bought this 4-hour gained level support, and I'm going to hold this full position until we get to our first untested resistance level. Okay. So that worked one time. And then the next time it goes almost all the way to your level and then it didn't work. Well, where are you cutting the trade?
Right.
Do you have, are you stopping break even plus 10, break even plus 20? What if the level's 70 points between level to level? What if the level's 30 points between level to level? So it's not that it's not doable and that both don't have pros and cons. It's that I think it's easier to define a strategy using a 2-to-1, 3-to-1 type risk reward, all in, all out type strategy. And then the more you complicate that, obviously the harder it is to then quantify whether or not your strategy is consistently profitable, because now you're incorporating nuance and maybe like subsets of rules and things like that. So to kind of circle back to what my answer would be, which is both, I like to use an arbitrary kind of like pay myself along the way. So I'll just give an example. Let's say you take a 15-point stop. Your stop is 15 points. I might take a third of my size at 30 points. I might take another third at, say, 50 points. And then I might leave the last third of my position to go and attack my areas of interest or my levels. And I may choose to then add as we break through some of my levels, because I've now got a well-protected position entry. Because assuming we're now starting to get to those levels, which typically I design my work so that my levels are somewhere between 75 and 100 points away. And again, by design, so that if I get to TP1, I get to TP2, now I'm somewhere about 25 to 50 points away from my next level. Well, okay, we hit my next level. I maybe take a piece of my third off and we break through that level. Well, now I can add back, and I'm 75 points, 100 points away from my entry, and I can add back, some portion of the position once it sort of bases and it looks like it maybe will break out of the level. So for me, I like to do a hybrid version, and whether you want to call it kind of like paying for a portion of the trade along the way or whatever, but it on average, what I've found is that if I can get to TP1 and then TP2, if I get stopped on the remaining third, which I'll move my stop to break even and just let it run. Unless I see something like, just if I'm long and I see just like, whoa, that's a big sell. Yeah, okay, cool. Just cut the trade. I don't need to watch this come 50 points back against me. But for the most part, it's now I've locked in on 2/3 of my position, on average, like about a 2 to 2.5 to 1 R. And the rest can just go to be a day maker, week maker, month maker, who knows? And then you can mix in ads and all that kind of stuff that you do. But I like to do something like that. And I actually would like to get to a point where even less of that position comes off, where you're letting more work towards those levels. So again, I think it's like, for me, the right answer is somewhere between paying for the trade at some managed risk reward level. Again, in NQ, I like to do about 30 points because it's about an average rotation or the meat of an average rotation currently. And then just let the thing work. So, right now by 50 points, I'm out 2/3 of my position and the rest gets to work. Right. And the other piece of this, besides the fact that I know that I've sort of like locked in a quote unquote good trade if I can get to TP2 and the last third is just working for me. The other part is like, I've sort of earned the right to use discretion now. Whereas like we talked about all the issues with just trading level to level, all the what ifs, right? Well, okay, what if now I've already paid for 2/3 of my trade. 2/3 of my trade is off. I'm at 50 points. Now I can decide, hey, maybe I want to take profit at this level. Maybe I want to take profit at the next level. Maybe I want to add to this when it breaks the level. I've already basically paid for this trade, and I've earned the right to decide how far I want to push this trade, whether or not momentum on this day should carry us further. Are we seeing trend day tendencies? Are we pulling into a big daily resistance level, and I want to just take the whole 2/3 or the whole last third off, at this level versus maybe a partial of it and letting it go to the next level, blah blah blah. All the different things that you can do, you sort of earn that right to push your discretion onto the market and onto this particular trade.
Yeah, and why would you be trying to force something like those big moves when you haven't been paid yet either, right?
Yeah.
Like I subscribe to that school of like, if you don't pay yourself at some point, you got to pay yourself, right? If you don't pay yourself now, when will you? That's what George used to always say.
Yeah.
Yeah, it's a big confidence booster thing too. And again, I'm not saying it's for everybody, because there's certainly people that will just, whatever their strategy is to hold core. But there's something about covering your expenses, and whether that expense is like actual money in the market or it's like mental expense of watching a trade go and come back to break even and stop you out, or go and, take a full size stop on it. Whereas, a trade goes 30 points, you take a 30 position off. Well, okay, so whatever. Let's just say it's what divides by 3. Let's just say it's 6, right? So let's say you're in 6 contracts. It goes 30 points, you cover 2. Okay, well now if it comes back and it stops you out, the full 15 points on 4.
Yeah.
Right? So you have 4 left and you had a 15-point stop and you didn't move it. Well, you just lost 15 points on 4 contracts, which is what?
60 points.
60 points. Well, I just made 60 points. I just made 60 points on the 2, right? So like at some juncture, it's like, okay, this was a scratch trade. I got in, I followed my process, and whatever. Maybe you don't take the full 15 points or whatever. Maybe you stop break even, whatever you do.
It's still a risk-free trade now at that point.
And there's some mental capital that's gained there that I think is like, it's got a value. That's for sure. And it's more than just the money, that's won and lost, or whatever the right term there is. But
I would argue that most people's breathing would change when they take that core off.
Right.
Yeah, you get that core off. Oh God,
right.
Core off, core off. All right, core off. Yeah. I mean, it's the stages of the trade, but it's certainly.
Thing is, if you only swing for home runs, then you're going to get a lot of strikeouts.
Yep.
Right. And can you take those strikeouts?
Right.
Can you take 10 strikeouts and 1 home run?
Ooh, I can't.
No.
I know I can't
either. I can't either. I like give me a bunch of singles, maybe a nice double in there somewhere, and then boom, you get a nice home run. And I think this is all to say that every day and every auction is the same, and it's not, right? So you might set out to be a risk reward trader taking 2 to 1, and you got short the OR low today in NQ. And when it broke that OR, it broke and it never came back. And then you look at the OR high and you go, wow, we never traded 1 tick above the OR high. And then you watch developing mid from RTH and RTH VWAP, and it never breaks RTH VWAP or developing mid in that first journey. Are you going to take profit at 30 points and close that position? Or are you going to observe the market and know the nuance to say, whoa, this is trend day stuff. Like, let's maybe only take half of this position, or let's, whatever shit, let's add, is the right answer, but easier said than done. So but the point is like, yeah, okay, be a risk reward trader, that does it arbitrary 2 to 1, 3 to 1. But when the context of the day is telling you that you should be trading, for a trend day, which typically makes the low in the last hour of the day, and you just took 30 points and you watched it go 380 points, which I did the other day. You want to talk about spending mental capital. Good luck sleeping that night when oh, look at me, I booked my 30 points. When you knew darn well. And it's one thing when you don't know, but like if you have seen it happen enough, right? Like you have to be fluid to show what the market's giving you, because some days, like a balanced type day, you're gonna crush it, right? You're gonna get 10 to 15 great opportunities to take a 2 to 1 risk reward trade, and you're going to hit your 60% win rate or whatever you have, and you're going to do well. You're going to make points, right? And whatever, no big deal. But that day that comes along and you took the OR short and you took your profit and you're flat after 30 points. And then you spend in the best case scenario, you spend the rest of the day just watching the market just go without you, because it doesn't set back up. It just kind of basically churns straight down. It doesn't give you a very clean setup. And you got 30, whatever. You get your 30 points on whatever contracts you had. Great. Worst case scenario is you start thinking, God dang it, did I miss a trend day? Look at this thing. It's going to go. I was short from the low, or I was short from the high. And then what do you start doing? You start trying to make it go the way you want it to go. So, we all know what that happens then. But that's why you need to be, there is no right answer. There's a foundation, again, like, what lends itself best to you, your personality, things like that. But there's also being fluid, right? Like if you're a level to level trader that's typically scaling out, along the way, and you have some big level and you're starting to see trend days, well, take off less, pay yourself less frequently, hold for longer, add more, bring that average down or up depending on which way the trade's going. But that's just as important as being able to identify which one you want to be or which combination of you want to be is, does that make sense for what I'm seeing in the market today? And, most of the time that answer is probably going to be yes, because you're looking for trades that are inside your strategy. But sometimes that answer is like, whoa, nope, let's hold on to this thing. Or, the opposite is like, whoa, we're not going to make it to my next level. Let's just cover this thing. This is, you could have an amazing entry that rips 30 points and you get stuck holding 2/3 of your position because it just comes right back and you saw a huge sell. Let's say you got long, whatever. You got long yesterday's value area high. Pulls back into yesterday's value area high. You get long and boom, it rips up 30 points and you get your first take profit, cores off, right? Everyone's towel snap and celebrate. Cores off. You can breathe a little bit better. Well, as soon as you do that, now you're planning, okay, let's see if we can get to 50 and, then where I'm going to start attacking my levels. And in the middle of you celebrating and planning your next take profit, a massive sell comes in. Actually going, hey, that was an anomaly sell and I'm going to change my strategy and I'm going to either take another third right here or flatten up or move my stop up, whatever. There's a whole bunch of things you can do to sort of manage what you're seeing. That's where like order flow and just like day traders in general, like you have that edge of like you have the ability to add that extra discretion.
Mm-hmm.
That happens a lot. And I think that's where it's the other side of that too, right? So like now you're a level to level trader and all of a sudden you need to revert to, nope, this trade might only give me a 2-to-1 and boom, you got to cut it or some version of that. So there's both sides of that too.
It seems like the risk reward is you want to use some version of that initially until you can start to learn those nuances, because then you can at least observe and learn it and not get burned by it as much.
Earning the right to do it.
I mean, it's a great place to just be rooted in math, right? Like I think, you and I talked about this in the Back to the Futures is, you can basically build a strategy that's based nothing on math or nothing but math. This is my setup. This is my stop loss. This is my take profit. And these are my stats when I took 100 trades. You could care less about the nuance. What time of day was it when I took the trade? Were we above or below the opening range? Like all of these like notes that you could take to sort of impart discretion on, and they might be good notes, right? Like there might be something in there like VWAP is at 10 points above my long, and I'm looking to get 30 points. That's probably not going to work out super great, right? Like, or at least if it does, it's going to be a butt pucker getting through that VWAP, right? So, okay, great, like, yeah, but that's like to your point. That's the nuance that you learn over the time. But the simple math of it is, I don't care.
Yeah,
like I saw my setup form A, I clicked the button with my bracket B, C, I took the ride. That's it. And then at the end of the day, you compile your stats and you say, is this thing still up and to the right? Like, did I maintain a win rate that makes sense with my take profit strategy? The answer is either yes or no. And you can, to some extent, you could automate that, but you can build a foundation. You can build confidence in something that's rooted in a sound mathematical system. And then you can start to fold in nuance. And then you can start to, do hybrid take profits and things like that. So. Yeah, you're 100% correct that it's definitely the way to build confidence in a foundation is to start with that just math-based risk-reward strategy.
Whew, okay. Joel, you got anything else you want to try to sneak in here before we wrap this up?
No, I think we can cover the rest in part 3.
Why do I feel like you're setting me up for a massive conversation about Delta and part 3 here, seeing the notes we skipped.
You are, yeah.
Well, you kind of covered them somewhat a little bit.
Nah, not well enough though, Kyle. I think there's probably opportunity for part 3.
You did a good job of touching on them, though.
That's good, man. That's exactly how you dig the nuance out of other traders.
Yeah. It's like, so I usually keep a note like, okay, wait a minute. I got to go back to what you said here. You said you look for this.
The best part about doing these podcasts is getting the raw copy of the audio.
Oh,
hey, right. I'll take that raw copy. Absolutely. I just need Flurry's voice. I don't need mine.
Right.
Oh, that's funny.
Okay, guys.
Good
Well,
Lord.
we've come to the end. I got to wrap things up here, close up the shop, kick everybody out. Some people have real day jobs. Not me, but oh,
Not me
I'm sure you
either.
guys do. Flery's probably got another poker tournament he's got to get to. Thanks, everybody, for sticking
Oh,
around to
man.
the end here. If you know somebody who you think would benefit from doing one of these, or you got an expert that you'd like to suggest to us, shoot us an email, 2bulls@financialineptitude.com. And be on the lookout because we've got a couple more of these planned, and they're going to be fantastic. Thank you to Joel. Thank you to Fleri for doing this again. I think we might have to schedule another part 3. Maybe we'll just make this a quarterly event.
Deal. I'm in. Yeah.
You know I'm
I
always
know,
down.
I know.
You know I'm always down to talk markets, so let's go.
All right, guys. You guys anything, words of wisdom you want to leave the listeners with here?
Bet often, bet last, bet big. I don't know, something. What is
First or last?
I was trying to think of some like shitty platitude from Twitter that's floating around in the holiday season.
Hodl. They still say that?
Yeah, hodl. Buy Linkcoin. Buy Linkcoin. That's
Linkcoin.
my.
Oh, actually, wait a minute
Link.
before we go here, real quick. Remember when we were talking about crypto maybe a year ago, and you talked about a character that you really enjoed following just because he was nuts?
Oh,
Who was that?
yeah. The guy from Hex or whatever.
Okay. I was making sure that wasn't SBF.
Oh no! Hell no!
All right. Is he still
no.
around, or is he in jail too now?
Oh no,
Okay.
he's around, and he's obviously loving all the controversy because he's that guy that pretends to be the savior of crypto.
Nice.
So
Nice.
That's awesome.
All right, guys.
Thank you, Fleri, very much. Thank you, Kyle, for scheduling this. Thank you, Fleri.
Thank you, Joel. Thank you, everybody else. Goodbye.
Ever wonder if medicine could heal your people and your bottom line? Wonder no more. Express Scripts by Evernorth saved organizations over $53 billion in 2021 by driving out waste. Learn more at evernorth.com.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.